Well, last week was a tough one for housing market data amid rising mortgage rates and recession fears. We saw builder sentiment for single-family homes slump, and another key survey showed home builder cancellation rates doubling since April. So, are we in a housing recession?
The housing market has entered a recession. That's the consensus from realtors and home builders. Home sales dropped nearly 6% in July from June. That's according to new data from the National Association of Realtors. And sales are down 20% from a year ago. But prices are still high. First-time home buyers feeling the impact.
The housing market is experiencing a decline, and many experts are already comparing it to the 2008 housing bubble. This is not unconnected to the economy, which is experiencing a landslide recession. There's a lot of uncertainty, but as the saying goes, there are fortunes to be made in every misfortune. Hello, and welcome to another episode of Wealth Supremacy. In this episode, we will be listening to Robert Kiyosaki and his guest Harry Dent, as they reveal the abundant opportunities that this bad economic situation presents. Harry would be revealing his strategy to keep his capital safe through this market uncertainty and the investments he considers to be the best everyone should be on the lookout for. What about Bitcoin? He'll be talking about that too, so strap in. Today's episode promises to be explosive. If you haven't yet, subscribe and turn on the notification bell. It's much appreciated.
This is my opportunity to ask Harry a very important question. Why are you excited about, not excited, but you're confident in bonds is a thing?
Okay, what happens? So all of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all this stimulus throws money into the economy. What do governments do with this stimulus? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. So the money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people. Again, real estate has gotten just as overvalued as stock. The people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. It's the safe areas. It's the US Treasury bonds, which is the best bonds in the world. Other government bonds are good. Nothing's going to beat a 30-year Treasury bond.
Harry overshot the global financial assets figures, but he's not far from the actual valuation of about $530 trillion. Indeed, the disparity between global GDP and global financial assets is substantial. Not that this is abnormal, but it means that the assets do not have enough buffer to support their valuation when the economy is strained, as we're experiencing now. Harry proposes buying treasury bonds even though their interests are usually 1 to 2%, but they offer a value of security more than any other securities or property. This is because the government, particularly the US government, would always do anything it takes to pay the deficits of the treasury bonds. So historically, bonds have always been safe havens for investors. In one of our previous episodes, Raoul Paul also recommended bonds for those who need safe securities while waiting for the market to stabilize. You can check our videos for more top-notch investment analysis.
Problem is, most people are recommending gold. I'm like, look at 2008. Gold kind of held up early, and look at, in the worst, in the third and fourth quarters, gold went down 45%. Not the worst place to be in a diversified, but it was not the safe haven. The treasury bonds went up the opposite, 45%.
Right. I'm glad I asked you, because I don't have any bonds. So I was just, I look at an apartment house as a bond, if you know what I mean.
It's a high yield investment. I agree with you. And a staple, again, people are only going to trade down to multifamily, not up to expensive houses that are overvalued. So no, that's the defensive part of the real estate market. I'm saying the highest quality government bonds, particularly U.S. Treasuries, is the best defense in a crash.
That's fantastic. That's fantastic. Distinctions that we don't have.
In 2008, the world entered a recession that was set off by the housing market bubble busting. The year would see a lot of securities and properties lose value, and one of these commodities was gold. Gold lost 25% of its value, dropping as low as $690 before settling at $870 from its previous $1,035 price. This may be a bearable loss to some investors, but it proved that gold was not the investment safe haven many believed it to be in times of economic crisis. Did Treasury bonds fare better? U.S. bonds were so reliable during the 2008 recession that China kept buying U.S. Treasuries all through the year, increasing their holdings by $107 billion in 2008 alone. Another important market to look at is the rental houses market. While people were selling off their houses and settling bad mortgages, the rental apartment business was booming. The reason is simple. Demand for houses did not go down. In fact, there is a shortage of housing in the U.S., so while houses were being bought and mortgages were being taken for overvalued houses, the rental apartments remained a necessity. Harry is saying bonds and rental houses are the best assets to put money into at this moment, and Robert Kiyosaki agrees. What about Bitcoin?
I got to ask you about Bitcoin. What's your take on Bitcoin? Long-term, short-term?
Okay, very simple also. I compare the cryptocurrencies. Bitcoin's just like the Amazon of it, okay, of the new .com retailers that were the rave of and they were the rave only in the last part of the 90s bubble, and were the epitome of it. Amazon led that bubble and crashed 95%.
Wow.
Before it then went from 136 to 6 and then to 3,500, the next boom.
Good.
That's how I see crypto. It's the next big thing. I didn't get it myself, Robert and Kim, until at my own conference, a guy was speaking. He said he defined crypto as the digitization of all financial assets and money. I'm like, what's bigger than GDP 6-7 times all the financial assets in the world? And I'm like, oh, this is a big deal.
We don't buy real estate when it's high. We buy it when it's low. And so that's what Harry doesn't say, is that gold is coming down. It's about 1,700. Well, you and I have been buying it since it was 50.
Right.
And then in 2000, it was 300. So when you look at the macro or the longer term on it, so while Amazon was coming down, gold was also coming down. So you and I have backed up the truck on gold. And today it's worth 1,700. If it goes to 2,000, good. The point here is that it's when you buy, not when you sell. And the reason I think a lot of real estate guys are going to get crushed are the flippers, because they still expect the price of real estate to go up. So they're flipping the family home, or they're taking out second mortgages on their home because the so-called the value of the property went up. But real estate is also supply and demand.
Yes.
There's a huge, there's a shortfall of real estate in America. Demand is going up. So that's why residential is good as incomes come down. I mean, apartment houses are great.
Every stock trader knows you buy when it's low and you sell at the high. The problem is knowing when an asset is at its low and if it would ever go beyond the point you're buying at. Amazon was one of the companies that the .com frenzy gave us. And when is the bubble bust? Amazon shares dropped and lost about 90% of its valuation. This is not the first time that experts have compared the emergence of blockchain technology to the .com era. Harry believes Bitcoin is the Amazon of the cryptocurrency era. Even if the bubble busts and valuation really drops, Bitcoin remains a smart investment, as it would surely have a resurgence just as Amazon did. If he's right, then we can agree that a crash would only present an opportunity we should be on the lookout for. What is your take on this? Leave a comment below and don't forget to like and subscribe.